Hi, I'm Lindsay Alexander, and this is mybanktracker.com. Most people may not know this, but the way you spend your money could have consequences when tax season comes around. It's best to keep track of what you're spending money on to prevent that tax consequence. This will help you get your taxes in order and avoid those financial consequences for the future. There are a few things to be mindful of with your spending habits. The first thing to look out for is sales tax. There's a tax whenever you buy something from out of state and it's shipped to you. You'll be charged a sales tax on whatever item you purchased. Most people are not aware of this until after they bought an expensive item online, for example, and now will have a huge tax burden to deal with. There are some states that don't have a sales tax, and that includes Alaska, Delaware, Montana, New Hampshire, and Oregon, just to keep in mind. If you happen to buy a big ticket item from a company that doesn't charge a sales tax, you should make sure to set aside some cash when it comes to filing those taxes. You'll end up having to pay the sales tax, but you can limit the amount of consequence by making sure you have the money to pay at the time of filing. Another tax consequence is when you're using a mortgage to buy your home. If you're paying interest on your home mortgage, you can deduct that interest from your taxes, but only up to $1 million. If you open a home equity loan, that could also reduce your tax consequence. You can deduct your interest payments from the loan just like a normal mortgage, and you don't have to use the home equity loan to improve your house either. You can deduct it even if you use it for medical or educational expenses. Just as long as the loan is attached to your home, you can get the deduction. Another big factor to watch out for is out-of-control spending. Once those due dates for taxes come around, that out-of-control spending can prevent you from being able to pay your taxes. If you can't afford to pay them, you really need to check out all your options so you can pay them on time. But most importantly, if you can't pay your taxes at all, you must file your taxes on time. If you know you'll have the money soon, and you can submit the tax forms and wait for the IRS to send you the bill, which will give you a bit more time to get some funds together. But if you know you won't have the money anytime soon, then you request an installment plan by filing Form 9465. The government prefers you to pay on time, but if that's your last resort, then it's better than nothing. Also, you won't get penalized if you're sending the money little by little. But just be aware when you request an installment plan application, the IRS won't always accept it, in which case you'll have to contact a lawyer to see what your other options are. And for retirement accounts, you could help lower your tax burden. That's because many accounts let you deduct taxes on your contributions. There are some that require you to pay more money when you contribute, but you avoid taxes when you withdraw money. Your financial planner can help you plan your contributions to get you the most savings. However, if you move money from one retirement account to another or take an early distribution, maybe because you've been spending too much or using retirement accounts for a financial cushion, you're going to face high penalties and interest payments. The way you spend your money can greatly affect your tax consequences. And if you've been spending like crazy or have a huge tax burden, it would be best to see a professional who can help lower your tax burden without accidentally breaking any complicated tax laws. I'm Lindsay Alexander with mybanktracker.com, and together we're going to build your finances and rebuild the world.